Welcome to Nasdaq Trade Talks, where we meet with the top thought leaders in strategists in emerging technologies, digital assets, a regulatory landscape, and capital markets. I'm your host, Jill Malandrino, and joining me this afternoon, we have Russell Rhoads, Associate Clinical Professor of Finance at Indiana University, as well as Dan Deming, Managing Partner at KKM Financial. We're here to discuss the divergence between real and implied volatility. It is great to see the both of you with us. Welcome back to Trade Talks. And Dan, for lack of a more educated technical term, it really has been some weird patterns of the way we're looking at real and implied volatility in 2024.
Yeah, no question, Jill. The last couple of months, seen a big dispersion on both sides of this equation, where we did see realized vol elevated a couple of months ago with implied vol remaining below that. And now the flip of that dynamic, where we're seeing implied vol continue to move, even though realized vol is coming down now. If you look at 10-day and 30-day realized volatility, it's below 10. It's at the low end of the range for the last couple of months. Yeah, we're looking at the VIX and in measures of implied volatility over 20 here today, and continuing to firm up. And I think Russell and I are going to get into it, but certainly one of the big driving factors is the way the VIX is calculated when you look at the options chains looking 30 days out, which is right around the election.
Yeah, so Russell, let's take a look at that. What data do you have to support that it feels like a weird 2024 when it comes to vol patterns?
Goodness gracious, all kinds of data. I could spend all day with data. So basically, VIX is calculated a little bit differently than all the other volatility indices out there. And VIX uses weekly options, something that was introduced about a decade ago or so now, where the Friday before and Friday right after a 30-day time frame is what feeds into VIX. And the Friday expiration after the election is November 8th. And those options just popped into the VIX calculation the middle of last week. And when that happened, all of a sudden you have a series that has heightened risk priced in. I think it makes sense that the Friday right after the election, the options should be a bit more expensive. In fact, I took a look at the at-the-money straddle for the November 8th options, and then the Friday options that expire right before the election, I believe is November 1st. And there's over a 2-point implied volatility difference between the two. What's interesting is VIX was up 2 points last week. So you might be able to say that a good portion of that 2-point rise in VIX last week in a pretty quiet week for the S&P 500. I know we had the employment number on Friday, but on a week-over-week basis, we were up, I think, less than 0.25%. So you have the market up and pretty quiet price action, the type of thing that you would expect VIX to go down in front of. But it really comes down to that calculation anomaly. And for about another week and a half, we're going to, a little less than a week and a half, we're still going to have those November 8th options in there. However, as of Wednesday, their weighting starts to go down, and you'll actually see a little bit of a headwind as opposed to a tailwind just from that nature of VIX.
Yeah, so Dan, it sounds like we're in the middle of all this, right?
It sure does, Jill, and Russell laid it out perfectly as far as the dynamic there, and that's something that I looked at as well, looking at that at-the-money straddle on the November 8th strike or options, and yeah, it's firmly bid relative to the other chains around that time frame. So that's one of the big driving factors as to why we're seeing the VIX holding here and actually ticking higher as we move into this cycle, due primarily to the options chains pricing structure. Now, it is interesting, though, that the other big dynamic that shifted last week was the interest rate dynamic, and it continues to evolve this week. And the higher rates is less of a backstop for for the market as well. So I think that that's another factor contributing to demand for downside options, particularly given the fact that now we are seeing a new landscape, and also that's a landscape that wasn't necessarily priced in just a week ago. So I think that's also contributing to the higher price action and implied vol.
Yeah, and Russell, you're not seeing any selling of this either.
No, not much at all.
Yeah, I mean, that kind of, and that really was the trend where, any sort of pop in vol, you were getting sellers behind that. It feels as if, the market's waiting for something around the corner, if you will.
Well, what's funny is back in August, at the beginning of August, I think when we were talking the first Monday in August, remember we had that big spike up in VIX and it came down. I felt like that spike, I know that spike was a bit artificial because it occurred outside of regular trading hours. And that's another thing that you have to keep in mind when you're looking at the history of VIX now. They do start quoting it during European market hours. And I think I ran some numbers and it looked like 2/3 of the time, the daily high on VIX occurs during outside of regular market trading hours. So that's just another thing when you're looking at spot VIX that you have to keep in mind, that there are a couple of anomalies with respect to the way that it's calculated. And the best fix in my mind for that, pay attention to the front 2-month futures. The front
Right.
2-month futures, the futures traders, Dan knows better than I do because he trades it a lot more than I do, but the futures traders are aware of these types of situations. They're aware of VIX having a headwind going into a 3-day weekend. You'll see VIX under a little pressure, but you don't see it carry over to the futures at all. So I really do like to focus on the front month futures as opposed to the index, especially during periods like this where we've got a huge known unknown. We don't know how the market's going to react. Really don't know who's going to win at this point, I don't think.
Right.
But just taking that into account.
No, I 100% agree with Russell on that. 100% agree. I mean, you look at the futures tell a different story often relative to the cash, and I see a lot of people talking about the cash and quoting the cash. And as Russell pointed out, that anomaly in early August, I think it was at least 20 points, Russell, that we did see as far as the spike in the after hours relative to what was going on in the regular hours. So liquidity is a big driver as to the pricing structure for the VIX. And looking at these futures markets now, I can tell you though, you look at that front month future, and the front month future and the November future are still in backwardation, still elevated relative to the rest of the term structure in the futures market as well. So yeah, certainly concern right now, given the fact that the market's giving up some ground. The election is involved in the pricing structure. And also don't forget about the ghost of October past. That's another factor, I think, affecting the psychology and the sentiment in the market.
Yeah, and Dan, that was exactly the question I was going to present to you. With VIX in backwardation, it seems as if this is largely election driven.
It feels like it.
Yeah, I mean, granted, there's a number
I think there's also some concerns, Jill, as far as the interest rate environment that I pointed out. I mean, that's a big shift in sentiment as far as, and pricing. I mean, the fact that we're seeing yields over 4% now in the 2-year through the 10-year, with the Fed poised to cut rates again, that was not priced in just a couple of weeks ago. So that, coupled with the election, coupled with the psychological aspects of October in the past, we're seeing some heavy, certainly September's more sold than historically than October, but the big vol events have occurred in October in the last 20 to 30 years, even going back to 87. So I think that certainly also contributes to why we're seeing the pricing structure and the backwardation in the futures markets here in the front 2 months.
All right. Appreciate both of your insights as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.